Hello guys, I hope you're good. So today I want us to look at this pair, which is the New Zealand dollar, and we'll be looking for top-down analysis. Technically, fundamentally, we expect it to go higher. So I'll just do the technicals here, and later on I'll make another video for fundamentals. But for today, let's look at it technically. Now, look at this pair. We're going to do a top-down analysis from a monthly time frame. So we're going to cover the both minor and major inducements. And as I said earlier, that when you see when you have the bullish structure, price goes higher, and it goes to the upside like that, and we get something like a break of structure here. Let's say that we get a break of structure here. Once you get this break of structure, of course, the first pullback here, this will be a first pullback, which is your inducement. In some time, market will even do this and go higher, or come down, take out your inducement, and proceed to the upside. So you'll have this as your high, low, then you have a new breakout structure here. So the moment you have this breakout structure, definitely you'll be looking forward for this. You'll be looking forward for this area as your another inducement. And possibly you expect that if you break below this zone, you're going to get a change of character here, right? But when you look at this market again on a different way, you want to understand that this is your push to the upside, the low, and this is just the push to the upside, right? Sorry. Push, pull back, push to the upside. Price came here, it went away. But you're going to see that the source of all this move to the upside, this is the source. So whenever you are talking of major inducement, you are looking at the source of the major push, whether you're going to the upside or to the downside, and you're going to realize that this is your level that you should be looking at as a major inducement to be taken out, and all these ones are just normal inducement, standard inducement. All right, so this will be a major inducement, and if by any chance we get to take out this low, for example, by any chance if the price goes below past this level, you'll see it trying to rally to the upside again, because after taking out the major source of the push to the upside. So major inducement, at some point when you get to understand how it works, it will open up some few things. And you might see the price. You might see the price trying to rally to the downside there. For example, let's see something here. I don't know what is this. Just a minute. Don't know why my Microsoft is not responding. Don't know why it's not responding. There's something on my screen that I need to remove, and I don't know what is this. Let's proceed. Okay. Then you have this, and uh, Yeah, so I don't know what was that, but yeah, so whenever you have price dropping to the downside and breaking the structure here, you'll see it trying to rally where to the upside again, and sometime it will take out this inducement and it tries to do what? Do something like this, come down, take out this inducement again, and push to the upside. So you have to understand the major external and internal structure of the particular pair or the market you're looking at. So whenever you have that level, this is your high, low. And again, there's some scenarios, again, you'll see it trying to push, do something like this, it will go higher, break the structure before taking out this major inducement. And again, you get another push to the upside after mitigating your extreme point of interest here. So this can be again your inducement here. Inducement, and this will be like your internal minor inducement taken out, price goes down and goes high and break the structure. So anyway, that was just by the way. Let's look at this structure here. This is New Zealand dollar, and we're going to look at it from the higher time frame. So you can see when you go back to data, we can see there's a way it's been dropping, and I want to pick it from where I understand it better. You see here, we look at this structure. So the first pullback, yeah, and this was the pullback that created all this push to the downside. So once we take out this level, this will be our major inducement as per this structure, as you can see it here, right? So for this one, I just mark it as an inducement because it's the beginning. This is a lower low, this is a lower high. Allow me to remove the watermark there. Okay. Now, if we break below this zone here, we're going to get a new break of structure to the downside, which is a valid structure. Yeah. Once you get a break of structure like that, with the highest point, and the highest point is here because price went to this high. Is this really the highest point? Yeah. Price went to this high before going to the downside and breaking that structure. This is your protected high. This means that if the market closes past that level, we get our change of character. Yeah. But let's see what happened here. We can see on this structure itself, when price came to this low, went to that high, went down here, went high, created this low. This is your normal inducement. This is your major inducement. So this will be your normal inducement here. Inducement here. And this will be your confirmed low. And your major inducement, this is your major inducement, the source of the push to the downside. That must also be taken out for you to get a very clean move of the market structure. So this is supposed to be a major inducement here. So by any chance, if by any chance price closes above this zone, we get a change of character, and you'll know that now we are pushing to the upside. So look at this level, we have change of character, and this means that this market is going to attempt to go higher. But change of character, we see that we must have a candle close. So here, when you look at this particular structure, the candle never closed here. So you want to have a situation whereby the candle is closing the body, not the wick. So we'll extend this line here. You can see somewhere here we have a close. So this is a valid change of character. And where's the inducement? Look at this market structure. From the low, small pullback, another pullback here. And price went higher and came down here, right here, and went to the upside. This is the push to the upside, but this push started from this pullback. That's why the price went higher, came down, and went away. So your normal inducement, the normal inducement is here. Do this here, because it's a pullback and you go higher. This is your first inducement here, but your major inducement is this particular low here. So we'll have a normal inducement marked here, which will confirm our high. Then our major inducement will be all of this low. It must be taken out as your major inducement, taken out, and hence price can mitigate. You can see like here we have this area of accumulation. Mitigate that level and you mitigate what? A push to the upside if the price is really intending to go higher. This can be your demand zone to the upside. As well, if you look at the location of this area, you want to look at the location because you have to make sure that your demand zone is on premium. On discount, you see, if we do this, I have divided my rectangle into 4 parts. This one is a discount. Okay, this is a 50%, all right? So this is the 33%. This one is 66%. So if the market goes past this low here, I know that this one is almost on equilibrium, but this level to me is my discount level. So once it taps here, good. So you see, mitigated that discount location. And if you want to know how to do this setting, you can comment. I'll make a video about it. So let's see. You get a new breakout structure here. Right, so is a protected low. This now your protected low because price came to this low and went away and broke that structure. So here again, we'll need a major inducement. And you can see from this low, first pullback, internal pullback, and the high. This is your normal inducement, but this is your major inducement here. The source of the push to the upside. So this will be a normal inducement. And this will be your major inducement here. Major inducement, and you can see here, according to this structure, if you are looking for a location of an area so that you can have a demand zone, for this zone, inducement taken out, this is your high. But how about identification of the location from this low to this high? This means that if the price comes back, this is the only place I see imbalance here, I can buy to the upside. If the price comes here, I can buy because there's no any other imbalance here and I don't have a clean OB here. If I want to get a clean OB, I can go to a different, maybe weekly time frame and try to locate that area again so that I see an extreme demand zone. See? Okay, here is the place. So you can see on this one, for us to get an extreme order block, this one can work better. This candle here, this can be a good extreme demand. Now, so this means that for the price, let's go back to the monthly. If the price is a place here, okay, yeah, sure. So if the price comes to my extreme low here, I still look for a buy. And also this is another zone that is on discount. So we can see price took out the normal inducement there and went for the major inducement taken out. And once price took out those levels, you can see first mitigated this decisional demand and attempted to go higher. And you can see it's failed and it's attempting to go higher to this one at the extreme. Yeah. So if the price attempted to go back, so this one has already been used. And this is a place you're expecting this price to come to according to the monthly time frame. So there's a way you can analyze this internal pullback towards the demand because the price is just doing this, heading towards this level before you get a push to the upside. So here we can use, without just wasting a lot of time, let's see. What do we have here? We have this major high, sorry. This is our major high. Let me first go to the weekly so that I open up properly. If I come here to the weekly time frame, you can see the price has been pushing to the downside and it started from here. We're taking out this in extreme inducement there, but I'll not follow that. I'll follow this inducement here. Minor inducement. Taken out this year low. And according to this price kind of decided to mitigate around this zone here. This mitigation of that zone. And price went below, broke that structure. Both after we broke that structure, those are protected high, this level, because price went there before going to the downside and breaking the structure to the downside. So here again, you can see according to this particular structure, from here, low, pullback, another one to the downside. So these are our normal inducement, but our major inducement can be this high because after this major pullback, this is where the price started rallying to the downside. And we can see here, normal inducement is here. And extreme inducement is here, which is the major inducement and mitigation of this supply, because you know that if the price closes above that zone, we get a change of character. And now we are heading towards this low to break below that zone. So we know that the price is heading here, and you can know every time we break the structure, price will go up. So you can see after breaking this structure, like this, price again will likely go up before dropping. And again, you can see how this internal structure broken. This means that the price will still go up before breaking. So you can go to daily time frame and try to look at this structure again, internal structure, and we know that we are now bearish. So just look at this structure from here. If this is your low, if this is your, let's say the low is where? Where's the low? Here. Then I'll just mark out the extreme inducement. Now break the structure here. This is our high, high low. Then this is a major, this is inducement, the normal inducement, and the major inducement is up here. So price will mitigate this level. Sorry, it will mitigate this extreme supply zone here. We mitigate this level here at the extreme in that zone. We mitigate this extreme level. Here we get a drop, and let's see. Did we really mitigate this level? Yeah, it was mitigated and we got that drop. So the price, when this inducement was taken out, this was your lower low. And we're looking forward to break this structure to the downside again. You can see here, the structure is broken. Both, and there's a protected high. The protected high is here. Because price, after this, played around and went there and went the downside and broke that structure. So here, after it has broken the structure, what are we expecting again? We're expecting the market to go higher and take out the inducement. If you look at this particular structure, first, minor, taken out a drop. These are first inducement, our major inducement is here. So this will be our structure here. Normal inducement and extreme inducement is here, which is the major inducement there. And we have our extreme supply zone. Now, so what we can look at this structure here. If we look at this area, price went down high, went down, it took out this high and went to the downside. That's why this is my inducement level here. So what we look at this structure here, this means that at some point, we're going to get this price attempt and go higher, the upside. So what we're going to do here is that we'll go to 1 hour time frame. And we want to see that structure where the price has been dropping to the downside following the 1 hour structure from where it started dropping. So we'll look at it from here. We're going to look at it from this low, lower high, lower low. What I mean is this inducement taken out, breakout structure here, and normal inducement here taken out. Then we have the major inducement up here, right? Now we have a new breakout structure here. Both, then our protected high is here. Again, we see here, our inducement is here, taken out. There, our inducement is here, taken out. Then we have this lower low. The structure here was never broken with the body, and the market has been spending a lot of time here. So we can see the valid break is coming in around this area. Okay, around somewhere here, but this will have a breakout structure. So we have this boss and this is our protected high. So we can see that the market has, during the news, it rallied to the downside, and according to 1 hour, it's a very minor inducement. I don't like working with this one, but this seems to be a very small inducement here. So for this price to go up, we know that we're going to try to attempt to come to the upside. This is a protected high. If you break this structure here, this one will get the change of character here. But our major inducement is here because look at this drop downside. So our major inducement is this level. So at some point, I'm looking forward to see this pair push to the upside. We take out this major inducement before we see if we're gonna drop or get a change of character and push to the upside. So the only thing we can apply here to see if we are going to get this shift, I'll go to 15 and try to see something here. But the best advice I'll say that it's better you wait until either you come to one of these levels before you try to look for a sell. But as for now, if I use the 15 minutes, see that according to 15 minutes, this is the area that has been taken out. And for price to go up properly, we need a proper inducement. For this, push, pull back, price is here. So if this price can narrow down, rally to the downside and take out all these lows here, then I'll be interested to buy only after we take out this particular extreme liquidity. If I take out this level and mitigate this demand zone here, then I'll be interested to do it. Look for a bullish structure. If not, if it doesn't come here, then I'll prefer to wait until I get that change of character before I buy. So my bias is that I'm bullish, but the market will do anything. This is just speculation. We'll wait to see what will happen. So otherwise, I'll make a video about fundamentals on the same, then we'll see what we can do at the end of the week.